Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be talking about a pretty notable purchase that I recently made for Tesla stock today with my Robinhood portfolio. And this was, as you can see from the title, a $25,000 purchase. But one thing that I want to address right off the bat before we get into any of these details, this was not money that I had in my bank account that was just sitting there. Because for one thing, as you all know, I keep it transparent, I keep it real. And I tell you all that when I have cash, basically, if I don't need to use that for anything else, like whether it's credit card bills or some other necessary expense, then I basically just spend it whenever I have it on Tesla stock in dollar cost average. And taking a look at the portfolio so far, that has worked out pretty well for me. It's not a complicated strategy, but it's pretty effective for me. And before we get into this, of course, as always, anything that I say in this video is not to be considered financial advice. This is simply me just sharing my thoughts and opinions and some of the explanations for the personal decisions that I'm making with my portfolio and with Tesla stock. So do not take any of this as financial advice. This is me just simply sharing my mindset and thoughts and ideas. But like I said, this was not just $25,000 sitting in my bank account. This was actually a purchase made thanks to Robinhood Margin. And because of Robinhood Gold, which is something that I have for this channel, just because we get that extra level market data, and it just gives me some more things to reference when I do these videos. Because of that, I pay $5 a month, and it automatically, as long as I keep paying that $5 per month, I get $1,000 with no interest charge, considering that I already make that $5 payment every month, which is basically a payment towards this $1,000 with no interest, and then a few other benefits with Robinhood Gold as well. But like I said, this was with Robinhood Margin, but if you go past that $1,000, there's a 5% annual interest rate, and because my portfolio is a pretty sizable amount, I'm able to borrow a little bit more than your typical person out there, and that can be used in some situations to one's advantage to sort of leverage this borrowing money and leverage a little bit of debt based on a 5% interest rate, which I feel like is actually not that bad. But keep in mind, in general, this is a very risky move. This is something that should not be recommended for most investors out there. This can turn out very bad, and a lot more money can be lost because, for example, let's say I put 10K in Tesla and then I borrow another 10K and put it in Tesla. In a scenario where, let's say, Tesla drops 50%, not only would I be down 50% on my actual investment from my cash amount that I put in, but I'll also be down on that borrowed investment as well. So there's actually that possibility, for example, if you weren't using margin and you weren't borrowing extra money, you would only be down 50% on the actual cash that you had to put in, whereas if you did use margin, you would be down both on the cash investment that you put up yourself and then also the cash investment that you're borrowing from margin as well. So there's much more potential with loss with margin, and then you can also get margin called as well. But this is a situation that I have chosen specifically because it works out pretty well for my scenario, at least in my opinion. And with this video, I'm going to try to explain all of the details and why I decided to make this decision. So of course, as always, if you enjoy the Tesla videos, please make sure to smash that like button. But just taking a look at Tesla stock before we get into all of this, as you can see for today, we are currently at a value for the share price of $592.35 per share. And for the normal market hours today, we had a minus 3.10% drop. That's minus $18.16. And then in the after hours, we are at plus 4.36%, which is plus $24.75. So we had some back and forth movement with today, and the after hours have surged because of the announcement that the S&P 500 inclusion will happen with one major purchase rather than like two separate tranches on two separate dates. But getting back onto this major purchase, I'll go ahead and show you all the receipts, and then we'll get into some of the explanation for it. So if we take a look at the receipts for Robinhood, as you can see, 11 hours ago at 9:51 a.m. this morning, I made a purchase of $25,000, and with that, I bought 42.536621 shares at a share price of $587.73. So comparing around $588 almost to the current share price, which is $592.35, I've already made a slight bit on that, but keep in mind, like I said, this was at around 9 a.m. this morning, just to check out that time once again to make sure. This was at 9:51 a.m. and if we take a look at the portfolio at around 9:51 a.m. it was just a little bit under the line, or even maybe a little bit over it by that 1 minute ahead of what we're seeing right here. But in general, compared to the rest of the day, you have to realize that after I made this $25,000 purchase, Tesla stock actually took a huge nosedive afterwards, in which it went down minus 5.84%. So I just want to make an example out of that, the risk that you can take with using margin, because I don't want everybody out there thinking that you can just simply borrow money and it's, easy money. That's really not what this is, and I'm going to explain why I made this decision for my scenario. But like I said, there was a huge dip afterwards when I made this purchase, and then it started to rebound back up over the line, and then it dipped once again. And towards the end of the day, it started to nosedive around that area like we saw back in here. And thankfully, in the after hours, because of this announcement, some people started to buy more Tesla stock. But regardless of today's movement, that's really not relevant to me. This is a long-term investment for me, something that I'm going to be holding for likely around 10 years or so at the minimum. And I would actually consider this decision kind of similar to some of my more bold decisions that I've made in the past around Tesla stock. For example, I actually sold like $32,000 of VOO stock back in May for a $2,000 loss because I thought there would be a lot of opportunity for growth in Tesla stock. So like I said, I sold VOO and I put that investment money into Tesla stock, and I've already made so much more than that $2,000 loss, and it ended up being a really good decision for me. And another decision that I made as well this year was selling Microsoft and Apple to buy more Tesla stock as well. I used to have basically a 3-fund portfolio. It was Tesla, Microsoft, and Apple, and those were in order from largest positions to smallest. And I ended up selling both Apple stock and Microsoft stock to go all in on Tesla stock. I made some profit on both of those, and so far, Apple and Microsoft haven't really seen much movement since then, yet Tesla is up tremendously since I made that decision. So that's another situation where I trust my gut instinct and it worked out for me. And I feel like this is once again a situation where I need to follow my gut and I need to follow the logic that I have in my mind. And I feel like this is an opportunity for me personally, given my scenario. But I just wanted to preface this discussion by referencing those previous decisions because those have been situations where I've truly trust my gut instincts, and some people may have disagreed with me on those decisions, but it ended up working out well for me like I was expecting. And I feel like this could be another situation, and obviously I could end up being proven wrong, but I feel like the upside here is much better than the downside. To provide some more information on this decision, some of the main reasoning as to why I decided to make this purchase is because we have S&P 500 inclusion happening, and I just don't see how there's not going to be a little bit more run up at the minimum with this stock between now and December 21st. And even aside from S&P 500 inclusion, the thing is I'm not going to be able to put any money into this Robinhood account until probably around the month of April, which is when tax time is due. So for those of you that are familiar with the channel, you've already heard me talk about this, but basically my main goal right now is maxing out the Roth IRA. I think I owe like $1,370 to max that out for the year of 2020. And then after that, I just want to pile up some funds in the bank account to make sure I have enough to pay taxes off in April. So once the Roth IRA is taken care of, once that $1,370 is taken care of, I'm basically going to just be saving as much money as I can in my bank account to make sure that I have that payment for taxes ready in April. And then once that's done, that's when I can start to worry about buying more Tesla stock with the taxable account on Robinhood. And this was one of the major factors in this decision because I feel like between now and April, I just think that there's going to be a run up with Tesla stock. Yes, there's likely going to be a pullback probably after S&P 500 inclusion happens because you're going to have some short-term traders selling off. But the question really is there going to be a pullback enough to where if it does grow a decent amount between now and then, is that pullback going to end up being less than what I paid currently, which is like that $587 number? And even if it does pull back past that, in general, like I said, I'm not going to be able to be making another Tesla purchase likely on the taxable account with Robinhood until probably April of next year. And so this kind of gives me the chance to take advantage of an opportunity of what I would personally view as some pretty solid opportunity to make some gains here, because I'm personally just expecting to see some more run up out of this stock between its current share price now and what happens on December 21st. And like I said, there could be a pullback afterwards, but in general, I looked at it this way as well. If I had $25,000 in cash right now that was completely my money in the bank account that was not borrowed, I would likely just put that $25K in all at once. I would not be the type of person to drag it out and do it on multiple different days. You all know that basically when I get money, I put it into the stock market if it's money that I can spend, and I pretty much do it all at once. So that was some logic that I had as well in the situation where if I actually had some cash, then this would be a decision I would be making regardless. And given the fact that I have this opportunity me to take advantage of this situation with the 5% interest rate. It's personally within my risk tolerance, and I'm willing to risk paying that extra 5% and possibly not making money from this investment by using margin. And I'm comfortable with risking this $1,250 that I would have to pay in interest. And in my opinion, that's basically the risk here. I'm putting $1,250 on the line with the bet that I can at least get 5% gains out of Tesla stock between now and December of next year. Like I said, 5% annual interest rate, but I'll likely be paying a lot of this off, if not all of it off, hopefully by around the time of December of next year, just to make sure that I have this taken care of. So to me, what I view as the risk here is the $1,250 that will have to be paid with interest. But I honestly think that I can make over 5% between now and December of next year. Now, there could be a scenario where I actually make, like, let's say, just as an estimate, 30% between now and December 21st, but it pulls back a decent amount and ends up going under what it's at right now. Well, my explanation for that would be, even if it does dip under the price that it's currently at, I wouldn't be able to be making that purchase regardless, because like I said, I'm not going to be able to put any money into this account until, let's say, like April or so. So even if there's a dip between now and April that goes under that share price of what I paid on average with this 25K purchase, I wouldn't actually even be able to purchase that in that situation unless I were to use margin. And in that situation, if I'm waiting to not use my margin until a possible dip like that, then at that point, I'm also just risking it to see if there's actually a notable pullback under what it's at right now. So what I would be risking in that scenario would be me waiting and not using margin, and then there could be the possibility of Tesla never reaching this low price again. Now keep in mind, it could go either way and it could reach this price once again, but in my opinion and with my specific scenario right now, I think that this is a reasonable, risky play. And like I said, it is risky. I am risking some money here. I'm risking the possibility of me having to pay this 5% in interest. With that interest, I'm actually risking a scenario of this stock pretty much going nowhere, or at least getting under a 5% gain between now and December of next year. But as I stated, I just see this stock going places over especially this next 20 days or so. And if you consider the things that are happening in 2021, for one thing, we had the Model Y going to be ramping up production with phase 2 of the Shanghai Gigafactory being completed. That's early, like January of 2021 most likely. Then we have the Berlin Gigafactory being completed, likely the Austin, Texas Gigafactory being completed as well, and then Cybertruck production possibly happening late 2021. And then, of course, you can explore that idea of Tesla semi-production happening as well. Keep in mind, all of these things are subject to delay, but in a sense, I just see so many events happening over this next year or so. And of course, there might be that announcement of another Gigafactory or just another major acquisition or investment for Tesla. So I think the future is very bright, especially if I judge this 12-month time frame that I'm going to be paying this 5% interest rate for. So I kind of just wanted to break down with this video my justification and some of the thought process that I went through to justify this purchase. And yes, I know this is a lot riskier than what I usually do with my portfolio, which is simply just buying shares and holding. However, like I said, I see some opportunity here, and I could obviously end up being wrong, but I look at it as, even if the bad scenario were to happen, then I just pay that $12.50 in interest. And to me, this is worth $12.50 to see the potential gains that could come out of $25,000 invested right now, and then seeing where that goes. So like I said, this is a risky scenario, but I just wanted to have this transparency with you all and let you all know that I'm making this play. And also, the reason that you don't actually see this additional $25,000 with the portfolio, like I said, that's because we are on margin. So if we take a look at the account over here, the actual total market value of the portfolio, including the borrowed money on margin, is $262,913.94, but it actually doesn't show that if you look at the portfolio just for like what we look at every day for the videos, which I actually kind of prefer, because I don't want to start counting money in the portfolio if I don't have that borrowed money paid off. I would personally rather it not show up if I haven't paid it off yet. So I actually like the way that they do this, but as you can see, it says $25,965.47 borrowed on margin. Keep in mind, the extra $965 is from Robinhood Gold, where like I said, if it's under $1,000 and you have Robinhood Gold, then there's no interest on that, because you're basically paying interest with that $5 fee per month. But after $1,000, that's when you get that 5% annual interest rate on anything over $1,000. And also, one other thing as well that I kind of saw as like an advantage, keep in mind, I don't know the exact details on this, I could be completely wrong, but I have checked out like the tax deductibles for margin interest. I think as long as you have like equal investment income or more investment income than that margin interest paid that year, then it can actually be a tax deductible. Don't take my word on that, because I'm not 100% sure. I'll have to talk to my tax guy to make sure on that. But the only downside downside to that was I thought, well, all I own is Tesla stock. Where am I going to get any sort of investment net income for the year of 2021 if I'm not going to be selling Tesla stock, which I'm not going to be doing? But then I thought about it and I realized you guys use my referral links and that actually counts as investment income. So this is a big moment where I can plug my referral code because I believe I can use this as a tax deductible. Like I said, I'll make sure with my tax guy and all of those things. I'm not 100% sure on that, but I have checked it out a little bit. And if I could just get a fraction of that interest amount needed to be paid from like referral codes and stuff, it doesn't need to be the full $12.50. But in general, my point is you all using my referral code could actually help me use part of this interest as a tax deductible if it is a tax deductible. So that's another thing as well. There's a few advantageous positions with this certain scenario that works out well for me, like with that tax aspect that we just mentioned, and then also how it kind of works out well for me in the sense that I'm not going to be able to purchase any more Tesla stock within this taxable account until at least like April of 2021. So there's a lot of specific things going on that kind of played a role in this decision making for me to make this choice of using margin and taking sort of this big risk and leveraging this debt. But I think this is a chance where it could pay off, and even if it doesn't, it will be a lesson learned, and of course you all get some entertainment out of it as well. But this was just one of those situations where I thought, you know what, I need to trust my gut instinct, and if I'm wrong, I'm wrong. I just see a lot of upside to this risk, and I felt like for me personally, I should just trust my instincts and go for it if that's what I feel like I should do, which of course, as you all have seen, I've done that. So anyways, please make sure to smash that like button if you enjoyed this explanation, the transparency, the Tesla videos. I really do appreciate it. And also, as I stated earlier, if you'd like to support the channel, feel free to use my referral link to Robinhood or Webull. You can get 4 free stocks in total with Webull right now, 2 valued up to $250 for just signing up with my referral link, and then another 2 valued up to $1,600 for depositing $100 into your account. You can take that $100 right back out after you get your free stocks. That's what I did, and it worked for me. But like I said, with you all using my referral links, that would actually help me out a lot with this investment play in general. So I greatly appreciate that, because not only could I sell those referral stocks to pay off some of this margin, but it would also count as investment income that could be referenced for that potential tax deductible. Like I said, if it is a tax deductible. But anyways, I hope you all enjoyed this video, and I hope you have a fantastic rest of your week.